Are you ready to discover the emerging trends that could shape the future of real estate investing in 2025?
Absolutely. Today's leading experts provide their invaluable insights.
In just a few minutes, you'll grasp what could take days to uncover on your own.
That's right. We've distilled expert analyses into concise summaries that will empower your investment decisions.
Welcome to the channel, where today we are dissecting the pivotal shifts in the Texas housing market.
An expert provides insights on the economic cycles influencing current opportunities.
And stay tuned for a prediction on whether we might be facing a housing market crash.
Just a friendly reminder, this content is for educational purposes and not investment advice.
An analyst highlights a troubling trend in the housing market. Builders are confronting their highest inventory levels since the 2008 crash.
The analyst elaborates that this significant oversupply is forcing builders to aggressively reduce prices and rethink their strategies.
It's a critical moment for the housing sector.
The analysis of the data reveals significant implications for potential buyers and investors alike. The current inventory levels are unprecedented, significantly outweighing previous peaks.
What does this mean for first-time buyers looking to enter the market?
Builders are rolling out aggressive discounts to lure clients amidst declining sales.
However, if prices drop, how does that affect market stability going forward?
Why are markets in these particular areas facing such intense oversupply?
Demographic shifts and housing demand patterns are causing these disparities.
Substantial price corrections are projected in 2025 unless builders drastically adjust their production rates.
Will buyers wait it out or jump in while prices are low? Confidence isn't matched by buyer demand, which could lead to more volatility.
So essentially, we're looking at a classic oversupply scenario. To summarize, caution is emphasized for anyone looking to buy, as significant market shifts are on the horizon.
It's vital that potential buyers educate themselves on these trends to navigate this unpredictable environment.
An expert delves into the complexities of the recent Federal Reserve interest rate cuts and their implications for the economy.
There's a vivid picture of a market that appears to be thriving, yet warns of potential bubbles that could burst.
While the market has performed well this year, unsustainable growth may set the stage for a downturn.
The Federal Reserve's rate decisions are pivotal as they navigate the delicate balance of inflation control. Inflation remains stubbornly high, affecting essential goods.
Is there any indication that this inflation will stabilize, or should we expect further rises?
The stock market's current valuation poses a substantial risk, akin to historical bubble periods.
Is now the right time for investors to cash out before a potential downturn? While mortgage rates may deter some buyers, the demand in housing remains strong, driving prices.
Is waiting to buy a home a smart move right now?
While optimism prevails, a rapid sell-off could be imminent.
Investors must be prudent, especially as bubbles prove difficult to predict.
As more corporations consider Bitcoin holdings, its legitimacy may bolster further interest.
Isn't the volatility of Bitcoin a huge risk?
The insights serve as a wake-up call for investors to reassess their strategies.
The path to financial success lies in making informed decisions and being prepared for unpredictable changes.
An expert shares analysis of the volatile real estate market, emphasizing which sectors are poised for growth and which are likely to falter.
He underlines the critical influence of economic cycles in shaping real estate opportunities. A deep understanding of cyclical trends can inform better investment decisions.
The trend of families opting for rentals over buying is a key pivot in current market dynamics. The residential market is seeing price hikes due to limited supply and increasing demand.
Higher rates affect cash flow on property investments. Multifamily properties offer a strategic opportunity due to limited new construction.
Does that mean it's a buyer's market for multifamily investments?
There's distress in the office space, largely due to remote work trends.
Repurposing these spaces to meet current demands could be a silver lining. If interest rates fall, we could expect a significant surge in housing prices as demand spikes.
Should investors be diving in now?
Industrial sectors, especially last-mile delivery, are expected to flourish in 2025.
That makes sense given changing shopping habits. The self-storage sector is under pressure due to new construction outpacing demand.
Should investors hold off on self-storage?
The perspective underscores the necessity of adaptation in the face of market changes.
Investors should act with caution, yet seize opportunities in this dynamic real estate landscape.
An expert shares insights on Florida's real estate market, which is experiencing a seismic shift due to rising costs.
The importance of understanding the data behind the current housing crisis is emphasized. Census data shows Florida gained residents, creating initial housing demand.
However, as prices climbed, dissatisfaction among homeowners increased.
An alarming rise in inventory claims that it doubled as sellers react to market changes.
Does the expert believe there's still a chance for home prices to stabilize? Sellers are increasingly concerned as offers dry up.
Many found themselves over-leveraged during the height of the price boom.
Is insurance driving some buyers away from the market?
The average insurance cost is around $1,200 a month, which is unsustainable for many buyers. Persistent downward pressure on home prices is predicted as buyers become increasingly selective.
What does this mean for the housing landscape in Florida?
Should buyers hold off on purchasing if prices are set to drop further?
That may be wise if they can wait, but it's risky. Affordability could become an even bigger issue.
Florida's housing market is in transition and requires careful consideration from both buyers and sellers.
Understanding these shifts is key for anyone looking to navigate this turbulent landscape.
A personal story is shared regarding a devastating experience with Hurricane Helene.
The insights illuminate the chaos and danger that unfolded as floodwaters surged. The chaotic evacuation is illustrated as floodwaters rose impossibly fast.
The significant change in the landscape is emphasized due to unprecedented water flow. The emotional connection to the land stems from family heritage.
A tragic turn of events threatens this long-standing legacy. Local heroes emerged, but there's critique regarding a lack of substantial government aid.
What can be done to improve community outreach and ensure ongoing support?
Daily struggles to maintain warmth while living in a temporary situation are discussed.
Bureaucratic challenges in recovery efforts are passionately discussed.
Without continued support, recovery could falter.
What can people do to ensure local voices are heard? Failures from previous disasters could delay significant help.
Are there foundational problems in how we prepare for these situations?
Detailed recollections invite empathy and underscore the importance of staying engaged.
It's about building back better for future generations and restoring what was lost.
What a powerful discussion we've just had, reflecting on the complex conditions facing the real estate market.
Indeed, Jim Davis provided a heartfelt narrative on community resilience, emphasizing long-term impacts from Hurricane Helene.
And Phil Simonetta highlighted the real-time implications of population shifts and affordability, which are affecting buyers today.
Right, but while Davis and Simonetta focused on market stress, Ken McElroy pointed to growth opportunities he sees for specific sectors in 2025.
That's a stark contrast to Nick Gurley's analysis, where he raised alarms about rising unsold inventory and potential crashes. Definitely a sobering perspective.
And we can't forget Graham Stephan's warning about interest rate cuts leading to possible market corrections amidst ongoing inflation.
These differing views really highlight the importance of vigilance and adaptability in today's market.
Absolutely. The key takeaway for our viewers is to stay informed and consider both risk and opportunity in their investments.
If you found this discussion insightful, please like, subscribe, and share this video to help us keep bringing you essential insights like these.
Your engagement helps support our mission in providing valuable content aimed at navigating these tricky economic waters.
Join us next time as we explore the effects of emerging technologies on real estate. You won't want to miss it.